Good evening, everyone. My name is Keshi Modoi or Lucy Modoi, and welcome to this live stream. We'll be focusing on financial wellness, and today we are honored to have two amazing financial experts. One of them is an NBPS alumni like myself, and without further ado, let me bring Leah Kitewan. Leah, karibu sana.
Thank you very much. Can you hear me now?
Yes, we can hear you. Just start with a brief introduction and you can dive deep into your presentation.
Thank you very much, Keshi, and the community, the NBPS alumni community. Thank you for inviting me. I'm excited to share my knowledge with all of you. So as you've heard, my name is Leah Kitewan. I'm an alumni of the NPBS. Besides that, I know the past 2 weeks I've been asked about my bio. So the writers, let me give a brief introduction. Hopefully by the end of this, we'll have a bio. So I'm a holder of B.Ed Arts from Kenyatta University and an MBA from Daystar University. By year end, I should be a certified accountant. Held a lot of training on lending, relationship management, and leadership from European Investment Bank and Strathmore Business School. At the moment, I'm a senior branch manager and I head the branch that deals with corporates. So my areas of expertise are in lending and mostly SME. So I hope then the community online, anyone in business, I hope we can connect more even beyond this and see what we can do together. So today we are talking on financial wellness, but before I go further, I want to say that this is a session for all of us to learn from one another. So if you have a point, put it on the chat box. If you have a question, put it also on the chat box so that we are all learning as we go along. I'm not the custodian of knowledge. We learn from each other. No answer is wrong, no answer is right. It's purely on experience and what is applicable. So the aim of this talk today, number one, I would like that we all change our perception as far as finances are concerned and precisely money is concerned. So that is the whole aspect today. So our main goal is to just jog your mind, refresh your mind and refocus your mind on what is money, what it can do for you, what it cannot do. And as we go along, keep asking yourself, is it good to have or is a must to have? Those two questions. When you are thinking about anything money related, is it a good to have or a must to have? So as we go along, those are the lines of thoughts I want to provoke in your line of thought. Then number two, I also want to demystify money before we go further and finances. I know people may think the younger generation, 30 years and below, they don't know much about money. They are not cognizant about money, but I want to demystify that. Actually, the young people understand money better than all of us. For the young people, you cannot be their friend if you don't have money. And you can ask them in the room, they can tell you they don't date people without money. But in our generation, on the other hand, if you associate with somebody with money, you would be called a gold digger, a leech, or whatever it is, or a parasite. But the young people understand that money is a measure of success, and money is the language of the globe. So however you use it, they to understand. So today we just want to tie up what we understand about money, demystify, and how we can make it work for us. So we first start by financial wellness, and I will not dwell on this heavy English. I want to be as simple as it can be so that then it is helpful. What is financial wellness? This is a process. You cannot achieve it in a day. It involves effectively managing one's finances. And where you see the word finances, you can replace and say money. Making informed decisions and taking actions that lead to long-term financial success. I want you to underline the word long-term. Rome was not built in a day. So then when we go to next slide on financial stability, it refers to having a solid foundation in terms of income, savings, and assets. And what I want to highlight here, solid foundation in terms of income and success. At this point, I want to say, whatever you are doing, make sure it is profitable. underline the word profitable, you can gain from it. Price it appropriately to cover your costs, then you can make something out of it. Number 3, make sure it is sustainable. We can have it today, we can have it tomorrow, and we can have it the day after. That is stability. Those are the key pillars of building financial stability. I want to move on. I want to spend more time on debt management and budgeting, because I think those are the key things that I know we will spend a lot of time on. So the next thing I want to talk about is debt management. What is debt management? And where you hear debt, the common word here is loans. Somebody can type in the chat and say loans if you understand or if you can hear me. And managing debt is a very important aspect of financial wellness. It involves understanding and effectively managing different types of debts. That is several kinds. And I want to break it down so that it is very, very practical. Debt is good. Loans, let me say loans, basically. Loans are good. Our country has borrowed. Everyone has borrowed, so that then you can use it to progress from one level to another. For example, if you want to buy a car or you want to buy a house, you might not accumulate the entire amount of money by saving. So it helps when you approach a bank for a loan and then you can purchase whatever you desire. But there are some pointers I want to give about loans. I want to start with business people. For businesses, I want to understand to understand two things. There are two kinds of loan. There is a working capital loan. This one is based on the cycle. It is to fund your business. This in terms of buying stock, purchasing stock, and such things, and doing the job itself. And then there is operational items. There are two things here. In a business, there is what you are doing. For example, if you're selling, which is the easiest? Yes, let me do a very basic one. You own a shop and you sell just the normal shop items. There are some costs that are not, we call them administration costs. These include rent, they include salaries, they include electricity and licenses. Those are called operational costs. And those should be funded by the business. You should avoid borrowing to fund this. Make sure whatever business you are doing, it is able to cover these costs. So if you are borrowing for working capital, where you are borrowing to buy stock for the shop. I hope I'm very clear on that. You are borrowing to buy stock, and when you buy 10 cups, you buy 10 cups. Once you sell the 10 cups, be faithful enough to repay. If possible, borrow again. Short-term borrowing is cheaper than long-term. If you borrow a loan to buy 10 cups and sell, if the minute you realize the 10 cups, you should be able to pay off the loan. Do not prolong the loan until you have sold all the cups and you are still left with some installment, yet you already sold the whole stock, because that will land you into trouble. So I advocate for short-term loans for stocking businesses. I hope I'm very clear on that. Then there's another category which business people might need. You might want to buy a motor vehicle, or you might want to buy premises, or you want to buy a house. That is a capital item. Then you spread the repayment over a longer period, so that then you are able to pay based on your sales. You are able to pay based on your income. You're not straining your business, taking away your working capital to go and pay for the car, to go and pay for the house. So you need to be very clear about those three things, because what happens, the common mistake is where we are buying to fund our administration cost. And what happens, you fund them this month, next month you have no money to fund them. Or whoever has lent you the money has come back for the money, and then you find yourself in trouble. Number two, short-term loans are always cheaper. We are in a situation where we are dealing with increasing lending rates. So before anything, find the cost of that loan you are taking and pay it as soon as possible. It is cheaper to pay it at a shorter period. Then the other thing I wanted to talk about is about now the salaried individuals. These are the people who are not in business and their sole income is on based on their salaries. Observe the 1/3 rule. I know we are all familiar with the 1/3 rule, whereby your loan deductions should not exceed 1/3 of your basic. I know most people borrow for consumption, or even to you can use it for personal development. It may be a house, a car, plot purchase, etc. and etc. Please, before you proceed with those loans, ensure also you are checking the cost of the loan. Let me just tell you the truth. Mobile loans are the most expensive loans in terms of rates. But since I'm not here to market or demarket anybody, please check out and do your own homework. You are better off with a credit card where you use and pay than with a mobile loan. So that one you can go and Google and find out from even where you bank with, and just compare the rates, and you will be shocked. Number two, I also want to talk about CRB. I know you hear about CRB, and you have never known. CRB in full is Credit Reference Bureau. What we do, all lenders congregate and share information concerning all customers, what you have borrowed and how you repay. So we are in an era whereby we are pricing the loans based on the risk. It's called risk-based lending, whereby I profile you based on your credit score to then know how I price the loan. So it is important to pay your loan on time, because this improves your score. If you pay your debts late, you fall into a category of a risky borrower, and this affects your credit scoring. So please, if you borrow, ensure to pay on time. I hope I am clear up to that point. I also would like to tell the young people who are looking for jobs, CRB is also used for character reference. When you're going to apply for a new job, they check your CRB. If you have been listed negatively, that also reduces your chances of being employed, and especially in the financial sector, because this indicates somebody who cannot manage their financial matters, and they might be a risky employee. I hope I am clear up to that point. I'm also hoping, Keshi, as we go along, we can have another forum to discuss for the business people, because the topic of debt management and borrowing and loans, we cannot exhaust today, especially for people in business, because I think that is where it hurts the most. Maybe I throw to you and the community to plan another event where we can have businesses to discuss capitalization of businesses. This is basically how to raise capital, borrowing, and whatever the tools that they can get, and also emerging issues in the business environment. I know a lot has happened. We are dealing with high interest rates. We are dealing with a depreciating currency. We are dealing with increased taxes, increased regulation like data protection, etc. and etc. So I'm hoping that going forward, Keshi, we will be able to do that. So then I move to the other third thing I wanted to talk about, budgeting. Budgeting is a fundamental tool for managing your personal finances. This involves creating a plan for allocating your income towards various expenses, savings, investments, and income. And I want to pause there and ask several questions. And these are personal. I want you to take them to your heart and just ask yourself, do you know how much you make? For the business people, are you able to tell the difference between sales and profit? Turnover versus profit? Do you have a budget? Do you know what are your fixed expenses? Are you able to track your expenditure? Have you looked at your M-Pesa statement lately and computed how much you have incurred in terms of M-Pesa transaction costs? How much do you use for your lunch, your snack, and the outings? Have you looked at your bank statement and seen how much you are making? How much do you spend on lunch? Do you have a budget for transport? And are you able to adjust to cater for the rising prices? Do you spend everything you earn, leaving yourself with a deficit? Or do you have some excess and you are able to save? I mean, those are the questions around budgeting. And for you to navigate this topic, you need a high level discipline, personal discipline of being able to know exactly how you make, how much you make, how much financial obligations you have, what you need to pay, and rise above temptations, because I know temptations are the key issue here, whereby we are not able to overcome peer pressure. I know that those are things that we do. And then convenience with M-Pesa and mobile banking. It is a convenience, yes, but at the same time, at what cost? So those are the thoughts I wanted to provoke in your mind. Then I also wanted to just give you an example. Where I sit in my office, behind me, those who know me, I'm a bit careful on food and what I eat, because I'm scared of foods that may bring trouble. And every day, my colleagues who sit, we are separated by a glass wall, are always in the morning having a feast, mandazi, samosa, and you can smell and you can hear the happiness, the taste, and they are having some sort of fellowship on every single day. And I always tell them, for me, it's such a struggle to rise above not even smelling what they are eating, so that I don't join their bandwagon. So temptation is there. But how do you deal with it? Are you disciplined enough? Are you strong enough? Do you have an accountability partner? Are you tracking yourself? Are you going for sales? Are you keen on bulk buying? Because those are ways you can save money, loyalty points, and so on and so forth. I want to then head briefly to the savings and investments, then to set the stage for Lucy, who is coming after me, to then give us the other part. So for savings and investments, it's building savings and making wise investment decisions that are essential for long-term financial wellness. Underline the word long-term. Saving money allows individuals to build an emergency fund, achieve short-term goals, and secure their future. Investing wisely will help you grow your wealth. And I don't want to dwell on investment, because we have an investment banker in the house who is who is very vast with that topic. So there are some other ways you could save, and I'm just setting the stage for Lucy. Do you belong to a chama? That's also another way of saving. Do you have a personal savings account? Do you have insurance policies, stocks, and any money to shelter you for a rainy day? So I want to stop at that, and I hope you have heard me loud and clear, and maybe hand over. Keshi, before I hand over, talk to me.
Sorry, I was on mute. I'm saying, wow, I don't know if everyone is like me. I was just taking notes. We are learning so much, and we are so honored to have you here with us, Leah. So, because we don't have so much time, I've requested people on the comment section to type in their questions, and we will address them at the end of the session. So, Leah, stay put. I'll bring you back a little later. And that was really, really great. Thank you so much. So, guys, I'm going to bring in Lucy Wanyoike, who is our second speaker. Lucy, are you there?
Sorry. Good evening, ladies and gentlemen. Thank you for the invite. Thank you, Leah, for taking the team through commercial banking and what commercial banking is all about. I will briefly take you through investment banking and the difference between commercial banking and investment banking. So investment banking is a special segment of banking operation that helps individuals or organizations raise capital and provide financial consultancy services to them. So they act as an intermediaries between security issuers and investors and help new firms to go public. Now, for investment banking, we are not deposit taking. What we basically do is that if, for example, you receive a loan or you have saved your money in a bank, we are the ones who come in to maybe advise you on the different ways you can either gain more return or where else you can invest your money, put your money to grow your money. So I will briefly take you through Standard Investment Bank, who we are, and introduction to Standard Investment Bank and the banking solutions that we offer as an investment bank. So Standard Investment Bank is one of Kenya's largest indigenous investment banks. By that I mean you could maybe be aware of investment banks like basically brokers like Dan Blair, where you can go buy shares. There are many, they are about 20 in number. So we are one of Kenya's largest indigenous banks. And what we hold is that, for example, in Kenya shilling, value of SIB's company capital over three times. Basically, for you to be an investment bank, you must hold over three times regulatory requirement of over 250 million. That is in basically when we talk about securities, like maybe if you have bought shares, if you have bought if you have invested in shares, that's shares in the Nairobi Stock Exchange. So our regulator, who is capital markets, they require us to hold a certain worth of the shares for clients. But of course, the shares are held at CDS, that is Central Depository of Kenya. Then we have over 25 billion value of equities, and this includes a Mansa X asset, assets SIB manages. Then we also have, we are regulated by, our regulator is NSC, we have CDS and CASIB. Those are the members of the Nairobi Stock Exchange, of brokers and investment banks. So when we look at investment banks, we fall under, our regulator is capital markets. But for the commercial banks, their regulator is Central Bank of Kenya. Now, I will briefly take you through Standard Investment Bank, who is one of, like I have mentioned, one of the investment banks in Kenya, our milestone. So we started off as Standard Stocks. So this was a broker. We started off as a broker in 1995. And initially, a while back, the difference between a stockbroker and an investment bank is that with a stock brokerage license, you're only able to do very minimal services to the general public. So in 2003, we managed to get the Standard Investment Bank, the license as an investment bank. So when we got the investment bank license, we were able to have more services that we could offer. So I will also take you through the services that we offer. Then in 2008, we were the best investment bank. 2016, we managed to do large transactions. By that I mean, we are able to do IPOs. We are able to do IPOs, mergers and acquisitions. So those are other services that we offer. That is both individually and also for corporates. Then in 2018, we were the first money manager investment bank. We were actually the first to be licensed with the money manager license. By that I mean fund managers, whereby we can actually trade forex on behalf of clients. Then in 2022, the launch of Mansa X USD fund. We are also able to trade as an investment bank in forex trading with the USD. I will, in the next slides, I will slowly take you through what other services we offer as an investment bank. So what are the products and services an investment banks offer? One, equities. So our equities arm trades in companies, that is stocks, derivatives. SIB, which is Standard Investment Bank, was the first institution to execute the first derivatives futures trades in the market. That is July 2019. So one of the things that we do, like I mentioned, is equities. Now, if today you're looking at buying shares, for example, in the Nairobi Stock Exchange, you will come to us and then we will guide you on the processes on how you can invest in the Nairobi Stock Exchange. Then we also have the fixed income arm. So the fixed income department trades in fixed income products for local and foreign institutional investors. We focus mainly on government bonds, euro bonds, corporate bonds, and treasury bills. So that is also another service we offer clients. Then we also have a corporate finance department. So our team works with Kenya's largest public and private institutions to inform their strategic growth, structure their balance sheets, raise and restructure their enterprises. So that is also another arm that we have, the corporate finance. Then we also have a research department. SIB undertakes rigorous due diligence in order to provide insight and clarity on investor opportunities and investment opportunities to investors. Our reports comprise of evening daily trading briefs. That is every day after trading, we are able to give or to send our clients how the Nairobi Stock Exchange has traded, or even the bonds. We have the fixed income wraps, weekly and equity markets reports. That's either monthly and even quarterly reports. Then we also have our last product and also a service we offer. We have the global markets department. This particular department, the global markets department, offers exposure to global financial instruments such as the world's major currencies. For example, if you're looking at trading in forex, you're looking at trading in markets like the New York Stock Exchange, London, Tokyo, you can come to us. Through our global markets department, we are able to actually give you and offer you this service. I will go to the next slide and the highlights. Like I have mentioned earlier, the services and the products that we offer. Now, we have been able to do IPOs. That is, for example, Kenyan IPO, Safaricom IPO, rights issue. So IPOs, bond issuance, and private placements. We have been able to advise, that is corporates like Standard Chartered, Jamii Bora, and many other banks we have worked with. I have mentioned about the rights issue. We have been involved in 20 rights issue, including financial services, that is in the banking and the insurance, aviation, utilities, and hospitality industry. So we have also been able to do takeovers and mergers, that is delisting of certain companies. For example, like we have National Bank, Access Kenya, Kwal, Unilever Kenya. We have been able to do transaction advisory. We also have been able to do business valuations. Like, for example, we have the Kenol Kobil, we have Kwal, we have Total Gas, we have Nakasero Hospital, ESOPs, which includes KCB, Kwal, Jamii Bora, which is Jamii Bora Bank. So these are just highlights of what we have been able to do, meaning we have so far been able to do over 60 successfully closed projects, transactions worth 200 billion. So you can see there is a difference between an investment bank and a commercial bank. Basically, an investment bank will offer you products and services. Once you have acquired the money, for example, from the commercial banks, for example, equity Standard Chartered, Barclays. Then when you want other services, that's when you now approach an investment bank. So that's the difference. We are not a deposit taking bank like the commercial bank. So we don't hold clients' money. For us, we actually just take positions on behalf of clients. So these are some of the corporates we have been able to work with. That is Lab Trust, we have Aecon, we have National Bank, CPF. There are quite a number. So these are just some of them that we have been able to work with. Now, investing in NSE equities through SIB. Now, when we come to investing in the Nairobi Stock Exchange, so SIB equities trading, we call that an equities trading department. So SIB is a member of the Nairobi Stock Exchange and is licensed and regulated by the capital markets as an investment bank. So clients can open and operate a new CDS account. So a CDS account is the one that when you buy shares through us, your shares, for example, will be held at the CDS. So if you buy, for example, Safaricom shares, they will be held at the CDS in a CDS account. So we also reactivate a dormant CDS account. For example, if you have not traded in a long time in shares, your account goes into a dormant status. So you have to activate that. That is just by filling a form. For example, if you are registered, if you opened a CDS through us, we will just need a few documentation, and then you complete a form, and then we activate for you your form for you to be able to continue the trading, buying shares. We also transfer we also do transfer CDS account from one broker to another. For example, if you had bought shares through maybe another broker or another investment bank, now if you wanted, for example, to trade with us, what you do is that there's a form you will fill from the other broker, and then you will approach us, you will do our normal KYC, then we will register you. The CDS account now will be held with us, and now that new form you have come with, we will be able to transfer, we will be able to send the form to CDS so that the shares can now be transferred to Standard Investment Bank. So meaning now you will be trading with Standard Investment Bank. Then access online shares trading portal, which has the following benefits: view real-time shares prices, view statements online, place purchase stroke sale and payment request online, amend non-executed orders, view trading history. For example, if you're very well, if you're able to, if you're for example, if you're able to trade on your own, we also offer you an online trading platform, meaning you can trade from wherever you are. You don't need to necessarily send us an order for us to buy for you maybe certain shares. Then what are the charges? Brokerage fees is 2.4% commission on transactions below 100,000 and 2.1% commission on transactions above 100,000. Then the other thing, account maintenance is free. So basically, we don't charge you for maintaining the account. So this particular department is tasked with equities trading. If you're looking at investing in the Nairobi Stock Exchange, that is what we can do for you. Then investing in the fixed income via SIB. SIB fixed income trading. SIB serves clients seeking to trade fixed income assets. For example, treasury bills, treasury bonds, fixed coupon bonds, and infrastructure bonds, and also corporate bonds. Now, if you're looking at investing in any of these, for example, treasury bills are short-term debt, meaning in 91 days, there are some offered for 91 days, 182 days, and 364 days. The return is receivable on maturity. Then we have treasury bonds. They are long-term debt. We have the 2 years and we have up to about 30 years. Of late, you have been seeing the government offering some of these fixed income, either treasury bonds or they have been offering them. So if you're looking at, for example, purchasing and maybe you don't know how to go about it, you can approach us and then we will guide you. So they pay the treasury bonds, they pay a coupon, that is an interest, every 6 months. Then the returns on fixed coupon bonds is subject to a withholding tax of either 10 to 15%. The returns on infrastructure bonds are not taxed. Now, what are the charges for us from our end, as opposed to sometimes you directly going maybe to CBK to buy the bond? We have some charges that we charge our clients. So minimum investment of the treasury bills, infrastructure bonds, that is IFB, and corporate bonds is Kenya shillings 100,000. Minimum investment, fixed coupon bonds, FXD is Kenya shillings 50,000. Brokerage fee is 0.035% of the transaction. 0.024 brokerage commission plus 0.011 industry levies. As we move on, in case anyone would have a question, I will pick up the questions and then maybe we could discuss. Now, investing in global markets via SIB. Like I mentioned earlier, as an investment bank, there are products and services that we offer. Now, when we look at the investment in global markets through SIB, we offer an investment option product called Mansa X. This is a multi-asset strategy fund. Basically, what it means is that we are able to trade on your behalf as a fund manager. You give us your money, and we are the ones who make the decisions on what markets to invest in. For example, we could invest in the forex market. We could invest in the precious metal. So this is a discretionary portfolio managed fund. And what is Mansa X? Mansa X is basically the fund profile. So the minimum you can invest is Kenya shillings 250,000. So Mansa X is both in Kenya shilling, it's a Kenya shilling fund, and we also have a dollar fund. The dollar fund, we started it last quarter last year. And the minimum you can start off with is 2,500. Minimum top up is Kenya shillings 100,000. And for the dollar is 1,000. Lock-in period, Mansa X investment has a lock-in period of 6 months. Financial services charge is 5% per annum, prorated over 365 days. Then we have a performance fee for a return above our hurdle rate. And the performance fee is 10%. So meaning, normally our target per annum is to give our clients a return of 25%. So in the event we exceed a performance of 25%, we charge the extra. For example, if we give you 26%, the 1% we will charge a 10% performance fee. Mansa X, Kenya shillings, hurdle rate is 25%, like I mentioned. And then the Mansa X USD hurdle rate per annum is 15%. So that is a target we look up for a year to give our clients, the kind of return that we look to give, we work towards giving our clients. Then, like I mentioned, we are an investment bank. We are not a commercial bank. So we are mandated by our regulator, who is Capital Markets, to have a custodian bank. And for the Kenya Shilling Fund, we have I&M Bank, who is our custodian for the Kenya Shilling Fund, and National Bank is our custodian for the USD Fund. Now, if you're looking, for example, if you have invested in this particular fund, the Mansa X, if you were looking at doing a withdrawal, you can only do a withdrawal after 6 months. And for you to receive your money, withdrawals are between 2 to 3 working days. If you do a partial withdrawal, 24 hours. If you have done a complete withdrawal, 72 hours, and the funds are already in your account. Then currently, from the last quarter, we report on a quarterly basis. Our AUM for this particular fund, that is the Mansa X, the Kenya Shilling Fund was at about 15.3 billion. And for the USD was about 10.2 million. That is as at 30th June, the last quarter. Remember that I had mentioned we report quarterly. Now, these are some of the asset classes that Mansa X invests in. So we have, of course, the local markets that we are able to tap into, and then we have the global market. So we have Mansa X is a very diversified fund. That is why you see we give the kind of returns that we give. For example, last year we managed to give a net return of 15.59. So the gross was about 20.59. Now, when we look at where is it that we invest, this is where we invest. These are the asset classes that we have actually diversified the fund, and this is where we invest. So we invest in the fixed income, the stock indices, the commodities, single stocks, precious metal, currencies, derivatives, NSC equities, and then we also have the cash and the ETFs. What are the fund benefits? Of course, there is the aspect of diversification from the traditional asset classes of Kenyan equities. That is, normally we were used to just investing in the local market. So Mansa X will help you diversify. For example, if you have also invested in maybe insurance, a fixed deposit, this is also another way you can actually diversify your investment. And of course, maybe for people who have invested in the bonds, and of course in the real estate, then the market is 24. It's a 24-hour market, and it's also a dollar return. We have, like I mentioned, we have both Kenya shilling, and we also have the USD fund. Then of course, Mansa X, we have the aspect of leverage, because sometimes we are able to trade more, we are able to get more leverage by trading more than what we have. So of course, that can also be a double-edged sword. So we are also very conservative when it comes to trading. Then of course, we have the other benefit is that there's a trading opportunities, whether the markets are moving up or down, the funds have opportunities to make money. Then we also, the other aspect and the other benefit of this particular product is liquidity. Investors can easily access their funds after the 6 months lock-in period. For example, if you have invested in a bond and sometimes you're not able to break that bond, let's say you have invested in a 2-year bond or a 1-year bond, sometimes it becomes even very difficult to sell off that bond. So with Mansa X, there is that aspect, you're able to get your liquidity after the 6 months. You can either withdraw partially or you can either withdraw everything after the 6 months. Then we also have the local presence. Where are we? Both online money managers, basically because we are a fund managers, we have brokers that we work with who are local managers, who are local brokers, and basically they are based in Kenya, and we, a Standard Investment Bank, we are also based in Nairobi. So we have the local presence and the physical presence, as opposed to whereby some in forex sometimes you have to trade with somebody in another country where you don't know. Then we also have the risk management aspect in this particular fund. It's well defined investment process. Asset class limits. We have asset class limits, like I mentioned, the different assets that we trade in. Then we have different sector and industry, and of course, we also have the geographical limits. Then we also have dealer limits, limits that they cannot go beyond. We also have intraday and overnight limits. We have an investment committee which overlooks the trades that are being done, for example, by the team. We also have a trustee oversight of the fund. This is just some of the risk management that we have. And of course, now we have capital markets who are regulator who do regular audits of this particular fund. Now, if we look at half of this year, that is from January until June, because we report quarterly, as at half year, Mansa X, the Kenya shilling fund, has managed to give an actual net return of 8.69%. Annualized return would be 17.38%. This is how the fund has performed. These are just from 2021, though we started the fund in 2019, January. So, like I mentioned, we actually do report quarterly. So these are just of performance over the 54 month since we started the Mansa X product. So for example, if somebody has invested 1 million and is still in the fund after 54 months, that is from the last quarter that we reported, that's 30th June, that person has actually been able to double their money and they're already at 2.11 million. So it's not a scheme like a get rich quick scheme, very conservative, but of course we are still very cautious on how we trade clients' money. Then if we look at the USD fund, as at half year this year, we managed a net return of 6.19%, which annualized rate is 12.38% for the USD. Anyone who is holding USD and they're looking at maybe getting better returns, that is also another way you can look at. So we started the fund, like I mentioned, in Q4 last year, and that is how the fund has performed for the last 9 months. The USD, somebody who had put in maybe 10K and about 871.71 net in the 9 months. So that is, you can see it's a growth of about from 10,000. They have already earned about 871.71. If after every quarter, like now we are in Q3 of 2023. So after every quarter, we normally highlight the top 10 holdings so that we are able to give information on where we earned as a particular return. So for the Kenya Shilling Fund, we normally highlight the top 10 holdings. So like the US dollar, the Euro bonds, and also the percentage of each investment that we did. Same case to the USD fund. So after every quarter, we give a report of where we invested. Now, returns of Mansa X versus other investments, as you can see, we have compared Mansa X to the government bonds, the fixed income, the SACCOs, the money market, and then you can see for Mansa X at the end there. Average return on 1 year on government bonds, and then average of top SACCO, money market, and funds in Kenya. So we have basically compared if you were to invest in Mansa X versus other investment options that you have, we have compared on what you would actually get. And I have come to the end of the presentation. Our physical office is at JKUAT Towers. That is former ICA building on Kenyatta Avenue. We are on 16th floor. Thank you very much. I'll take this back to Lucy.
Thank you so much, Lucy. I'll also bring back Leah because I think we should now go into the question and answer session. Thank you so much for those very insightful presentations that you've done. I know I'll come back and refer to learn a bit more. So at the end of the session, we'll also ask you to project your contact details. I can see some of them are there. And one of Lucy's contacts were at the beginning of her presentation. So I'll just go right into the comments. So Elijah says he's asking whether you can get the presentation. We'll talk to our panelists about that. So Mercy says, she's commenting about Leah. Great, thanks, Leah. I will. She always asks herself a question: is it a good to have or a must have? And then there's a question here from Stephen Washira. It's for you, Leah, and he's asking, I would like to know next of kin in banking sector. Why do the next of kin don't have direct access to the money in a deceased account? Leah? Leah, are you there?
Yes, you can hear me now?
Yes.
Good. Now, I just want to kind of explain something. Any improvement, any documentation that we use at the banking sector must be approved by our regulator. And some of these details are required by the regulator on the forms. In fact, the much we have improved lately is to put a contact person. But ideally, what it means is in case you come to the bank and something happens to you, there's a contact I can call to get you help. Supposing we are looking for you and we are not able to get you, we can reach out to somebody else. The issue of next of kin, then we had it had not evolved to a contact person, but the issue of next of kin, I believe, is addressed very well in our succession law, and ordinarily, I hope the legal counsel in the house or whenever they tackle this is a topic they will tackle on how to succeed in the unfortunate event of death, because you have to file in the court and be granted custody. Then the same is confirmation of grant, then the whole process. And once you have that court documentation you bring to the bank, then the bank does a search and confirms and pays the money. So ideally, we might not be able to pay you any money, even if you are next of kin, unless you have been given administration of custody. But the templates of collecting data are given by our regulator to comply with the prudential guidelines. So I hope that I'm clear on that. Thank you.
Thank you. Thank you for that, Leah. Tyra says that's a very insightful session for both of you. So there's another question here from Jane Berry. I believe it's for you, Lucy. If I have a CSD account through another investment bank, can I use a different investment bank?
Just to answer Jane Barrier, yes, you can have another CDS account with for example, if you're holding it at another investment bank, you can still come to our office and we will be able to register you in the CDS account. Now, what will happen is that each broker has a code. So, for example, if you hold your shares with the broker B9, and then we are broker B20. So you will be receiving two statements. One from the CDS, that is, you will receive one statement from that other broker who is B9, and then another one with B20, meaning whatever shares are held with another broker, we cannot see. We can only see what we hold at SIB. I hope that is clear, Jane.
Well, unfortunately for this session, we can only wait for her comment to see whether her question was answered. So thanks everyone who's tuned into this session. Continue asking your questions in the comment section. And yeah, we have our team of experts, Lucy and Leah, to answer any questions that you may have. So I don't know, Leah, do you have any other insights that we may have blocked you from the time was running so fast? Any other insights that you may have to add as we wait for more questions to come?
Yes, thank you, Lucy. I hear you are Lucy. I've always known you as Keshi, growing up in the same village. I want to just to say something on loans. I didn't get to tackle about loans for personal development. This is where you want to buy a new car. This is where you want to buy a piece of land. This is where you want to buy a house. It is okay, and I believe that is the whole purpose of loans, to develop yourself. But then before you proceed, first of all, know the total cost of the item. For example, if you're buying a piece of land, please be aware there are some costs that are related to it. For example, you will need to pay stamp duty to transfer the land to yourself. Then if you are going to a bank, the bank will need a valuation report, and there is a cost, and a lawyer will be required to charge the property to you. I hope you note that when you're buying something, an asset, a land, let's start with land, there's that cost that comes with it. So before you approach the bank or before you start making, it is important you start saving, knowing the costs that are involved. Number two, I would advise that then you do not borrow 100%. For you to enjoy development through loans, it is always wise to first raise some money on your own so that when you're approaching the bank, you're going for them to top up your deficit. I hope that is clear for you to develop. When we go to motor vehicle, it is a good to have, but then again, I hope you are aware there are some costs that also come with a motor vehicle. Number one, motor vehicle is a very, very good thing to have. It gives you convenience, and for some people it gives you status and respect in the society. But then on the other side, please note a motor vehicle is a depreciating asset. Maybe a vehicle you bought 1 million today, next year might not be worth the same amount. But I know when there is inflation, it distorts the prices of assets. But ideally, motor vehicle is a depreciating asset. Number two, please note motor vehicle has running costs, including the daily fuel or petrol or diesel, whatever the vehicle consumes. There is wear and tear, which requires mechanical support. There is insurance, which is required as well. So then, even as you're making that step towards owning a motor vehicle, have that at the back of the mind. As far as borrowing for a motor vehicle, the only cost will be what is NTSA charge to transfer. Otherwise, there are no other related costs apart from now the repayment. I hope I am clear on that. Number two, I repeat again, always go for short-term loans. Where you can pay the loan as fast as possible, it reduces the cost of the debt. Number two, be aware about reducing balance and fixed interest. Fixed interest is very expensive and it can drive you crazy. Always look for reducing balance. Number three, please, when you are borrowing, please try and go to banks, registered banks, because where the process is followed, banks that are regulated by CBK. Avoid Shylocks, because those interest rates are crazy. And number two, they are not a regulated sector. Please, there is no hurry. Approach a reputable organization, fill up the paperwork, get all the information concerning whatever the loan you are taking, total cost, how much you are required to pay per month, and also make sure what you are borrowing is something you are able to pay month on month. I hope I am clear on that. Lucy, confirm you have heard me on that?
Yes, loud and clear. You're done, Leah?
Yes, I want to give time for more reaction before I dive on to something else as I wait for questions.
Okay, you can continue because the only reactions will come in the comment section. So once they come in, I'll project them on the screen. So go ahead.
Okay, I want to just make another comment concerning the business people. As I had I had said, I specialize working with businesses, SME. I can delve on to something that is affecting the business people and everyone here. We are going through a lot of changes in the macroeconomic environment. In fact, this is the first time we are dealing with three problems at a go. For those who may understand, increased lending rates, depreciating currency in terms of the dollar rising each and every day, and inflation. Ordinarily, like if anyone remembers, in 2011, we only dealt with increased lending rates. The other factor of the forex was not there. So these three parameters have changed the environment, the economic environment significantly. So for business people, again, what else has come up is increased tax. Turnover tax is going up. So then the business people, I want to pose a question to you. Are you repricing your products or your services to be able to absorb these shocks and still make a profit? Or are you retaining the profit, the prices at the without considering all this, so that you can remain competitive? Because your neighbor is charging 10 shillings, and if you charge 15, you will not get somebody to buy, and then you're getting a hit and slowly shutting down. So I do not know whether you are able to do that. Please, business people, think about it, how you reposition yourself, how you reprice your products to remain competitive, at the same time sustainable. We say sustainable, I can do this thing today, tomorrow, and the day after, and it still keeps you going. So that is something I wanted to point out. Then again, are you able to reduce your costs? Because that's also another key, even at a personal level, because we are dealing whereby these three factors have affected the buying power, has affected the money we had in our pockets. Because what would buy with 1,000 shillings now you cannot buy. So what are you doing at a personal level, at your business level, to reduce your costs? Are there some tasks that can be done electronically? Then you reduce the manual intervention and the cost of labor. Can you be able to hire casual versus permanent, because of the costs that come with? So then your business is able to thrive. Then are you also able to increase your revenue, your sales, by doing more marketing, reaching out to more people, so that then you are able to scale up? So I hope I have covered that very comprehensively, but I'm still waiting. I'm here, talk to me. Thank you.
Thank you so much, Leah. I think Jane Beria has clarified that she meant CSD account for CPK, Lucy. So maybe you can answer her question again. She had asked, if I have a CSD account through another investment bank, can I use a different investment bank?
Just to answer that, I think there's a difference between the CDS account, the one for shares, and the one for holding the bond. So is there a limit on CDS? There is no limit on the number of CDS you have, and it's possible to have multiple CDS at the same bank or different financial institutions. So I don't know, Lucy, whether you've heard?
Yes, I have.
Yeah.
I'll wait for
So
her
it's
to
possible.
comment.
Yeah.
All right,
Lucy Modoi, I had something I have forgotten.
go ahead.
Yes, for again, should you be here and you have a loan, and because of the environment you are struggling to pay, you are struggling to raise month on month installment, maybe because the business has reduced, maybe you used to make 100, now you're making 50 or 30, please know you can approach your bank and request to restructure the loan, so then you can be able to pay what you are able to pay. Please, you can always go and have a conversation with your bank, so then you are not pushed to the wall where your repayments are piling up, and still you are not the business is not doing well. If you have your income has reduced, please approach your bank and let them know what you're able to pay, and seek to be accommodated through loan restructure. I think I had forgotten that key important point. And then also my contacts are available in all the groups. Please reach out to me should you have any issue concerning the loan. I'm here to help you at no cost. Thank you.
Thank you so much, Leah. Before we take our parting shots, because I see we have less than 15 minutes to go, could you maybe tackle a little on retirement planning? Leah? Leah, are you there?
Can you hear me? Yes, I am here. Sorry.
Yes, I can hear you now.
Planning for retirement is a critical aspect of financial wellness. It involves estimating future income needs, setting retirement goals, and implementing them to accumulate sufficient savings for retirement. I know according to our country, our official retirement age is 60, but there are people who retire earlier. So there are various things you can do. First of all, savings is part of a retirement plan. Number two, those informal employment, there are retirement schemes. Ensure you are able to get more information in it and participate as much as you can. For those who are not in formal employment, I think that is where the challenge is, the ones who are running their businesses and all that. And that is, you can partner with a retirement, you can actually create a retirement plan through the help of pension managers who can help you structure something. But the basic whole idea of retirement planning is saving for the future. For those who are in formal employment, I repeat again, please negotiate with your employer, find out what schemes are there and how you can benefit. I know the good employers contribute an equal amount of what you contribute, and then ensure also you are getting the statements to ensure that your pension is growing year in, year out. Again, it's not in a loss-making scheme. Be very active about it. Please don't think that 60 years or 55 years or 50 years is too far. You start now, small steps. You can also increase, you can actually even agree, you can even volunteer to save more in a formal pension scheme. You can volunteer to increase your savings so that when you approach the age of retirement, remember at the age of 60, the challenges are a lot. You are dealing first of all with decreased income. Health might be an issue. That's why you need to keep healthy so that then you are not struggling with medical bills. And maybe for those who probably will still be having children and families to support. So your needs, your financial needs will still increase, will still be almost at the same level. So the point is to plan how you are going to work out your daily needs without an active income. So you could invest also in schemes that have a monthly return, like real estate, whatever she was saying, shares, stocks, where you can earn something to keep you going in the old age. Thank you, Keshi.
Thank you for that, Leah. And we just have 5 minutes to go, and I think people are just absorbing and digesting because the comment section is not as busy as I thought it would be. But I think we'll just allow you guys to give us your maybe final insights, nuggets on what you spoke about today. And I'll be projecting your contacts on the screen so that anyone who wants to consult with you on a personal level or for their businesses, they can approach you. So we can start with Lucy.
I think my parting shot is investment is key. How do you invest? Have you diversified your current investment? What returns are you getting? Because I believe with the high cost of inflation, your money should actually give you value. So if you're looking at investment options, for example, like the Mansa X, which we have been able to give very good returns over a period of time, you can talk to me, as Keshi has said. She will share my details and she will also share the presentation and also just information on investment. I am ready to take that up and walk with you the journey. Thank you very much. Have a good night.
Thank you, Lucy. Leah?
I hope I have achieved my objective to provoke your thoughts around money, what you think about money, how you value money, and where you place money in your sphere of life. I hope I have provoked your thoughts about getting a stable source of income or sustaining whatever you are doing. And I hope I've also provoked your thoughts around debt management, that is loans, and budgeting, because those are the key things to financial success, and being able to scale the next level. Money is the language of the globe. Money is a must to have and also a good to have. But as you are spending it, ask yourself, is it a must to have this one, or is it a good to have? Have a lovely night. Thank you for such a wonderful opportunity to talk to you. I'm at hand. My contacts will project them, and I know they are all in the platforms. You can reach out to me and we can walk the journey. Thank you very much.
Thank you so much, Leah. Thank you so much, Lucy. We are very much honored to have the two of you come into this session. And I know a lot of people will be reaching out to you for personal consultation because, especially if you've not been making smart financial decisions, this is the right time to learn and get better at that. So thank you so much. I hope that when we invite you for part two, you'll make time and we dive deep into a specific topic. But I've learned so much, and I also will be reaching out to both of you to engage with you. So guys, send your love to them on the comment section. The session will be on our YouTube channel after this live stream, and continue engaging with us. And if you have any topic you'd like to share with the alumni or the world, feel free to reach out to us and we'll give you a platform to do that. Thank you so much, everyone. Have a lovely night. God bless you.